All right, we are live. Chat is opened up. We are ready to go. Welcome back, investors, to Ticker Time News. I'm Adam, and things may have started off a bit on a nervous note this morning in the stock market, but they certainly ended with a measurable sense of self-reassurance. The major indices all closed at their best levels for the session, gaining between 1.3% and 2.7%. Just look at this. On the chart is the S&P 500. The ticker symbol is SPX. That's what I use to track it. There's a link in the description of this video for TradingView. Click on it. It takes you there. You sign up. Free account. Doesn't cost a penny. And you can follow along right at home with all of the charts that we put up on the screen. So here's the S&P 500. What I'm going to do is I'm going to go to the 5-minute chart. And we're going to look at today specifically to show you what happened. Now, the S&P 500 specifically is really right at a point of resistance. 4170, you could call it at that line is resistance, but give yourself a little zone because nothing in the stock market is ever that precise, right? So maybe 4170 would be the beginning of that resistance, and maybe you could take it up to 4180. Give yourself that little zone, and that could be your resistance box. And that's where the S&P 500 is right now. It had rallied into resistance. And look at this strong start this morning. Well, let me back up a minute. The first hour of the day was a bit choppy, right? We were unsure where we wanted to go. Some data was released. It popped, it dropped, all in the matter of 15 minutes. But then around 10:30 Eastern time this morning, the S&P 500, the stock market got its footing and took off. Now, a lot of the nervousness right here was something that Microsoft said, and I'll talk about that in just a moment. But we rallied all day, and then the rally kind of slowed down as we got into the afternoon. But then the last 20 minutes, 30 minutes of the day, the market rallied right up to that point of resistance and is attempting to punch right through it. Can it continue that? That's the question. And I think I have a clue that's going to tell us whether or not this bear rally, dead cat bounce, whatever you would like to call this, whether it's running out of steam or is there another little leg higher before a pullback in this one. And I have a clue. And as a matter of fact, let me show you that clue right now. I'm going to go back to the daily chart. Okay. I'm going to take volume away so we can see a little clearer. I'm going to take moving averages away because we don't need to see that. I'm going to take the Bollinger Bands away. We don't need that. What we're left with right here, and what I want you to focus on, are two rallies. The rally we are in right now, okay, and this could continue going up, so I'm going to leave that open-ended and turn it to green. Or also focus your eyes on this snapback rally that we had right here, okay? I want to point out a couple of things. Number one, from the bottom, and I'm going to measure this. Where did my measuring tool go? Here we go. I'm going to measure this from the bottom on the snapback rally up to the top where we stalled right there. It was an 8.6% move in the snapback rally. And then we had one day where we chilled out. We had a pullback of 1.2%. And then we marched higher, right? We can all see that on the screen. Okay, I'm going to measure from the bottom, just like I did for the snapback rally, the bottom to the top of this rally right here, 9.2%. So nearly identical moves there. 8.6% in the snapback rally at the middle to end of March. And currently, we had a rally, 9.2%. But instead of getting one day of, well, let's see if this can continue. We got 2 days or 2 sessions, right? The next session was red. We were down 0.6. The following one down 0.7. And then we get today being up 1.8. So if these two rallies are going to be similar in any way, shape, or form, you would say that so far, the beginning, the pullback, okay, that's looking pretty similar. Now, let me take these two off of here, and then I want to focus on the second half. So from the bottom of the pullback to the top of the rally before it chugged out, which is right here, 46.32, 46.32, right there. Okay. Let me squeeze this together a little bit. All right, a 3.9% rally from that pullback to the top, 3.9% rally. So let's measure here from the pullback, okay, to the top of where we closed today is 2%. So if this is going to look similar, then let's say we go all the way, we'll call it rounded to 4%. So I'm going to take this to 4% and let's see where it leaves us. %, right there. It takes us to about, what was that on the, about 42.70. Interesting. Another 100 points or so above where we are right now. And just for reference, today we were up 1.8% or about 75 points. So if these are similar, then that could be where we're headed before a serious pullback or another big pullback in the market. And that area there is getting awfully close to that 3,000 point area, kinda, right? 42. It's closer to that 42 line than it is to 43. So in between this space right here. Now, we have resistance at 4,300 on the S&P 500 or 430 on the SPY. That is going to be a hardcore resistance. And if this rally continues, which it looks like it wants to, then maybe we get to 4,300 on the S&P 500, 430 on the SPY, and that's where we finally get a pullback from this rally. Not a stall like we had during these two sessions here on May the 31st and June the 1st, but a real pullback. That could be where we're headed. 4,300 on the S&P, 430 on the SPY. Okay, let's take those two drawings off of there. We don't need any more drawings on here. It's already enough. Okay, let's continue moving on. Also today, the VIX. Let's pull that up. VIX is the ticker symbol that you want to use, and you want to use the CBOE. All right, CBOE. Let's look at this. Now, it has been falling. Now, this line, purple line going up, it acted as resistance 4 different times recently, in recent history. But once it fell through, it has been falling ever since. And that makes sense because we've been in our rally. Now, it dropped 4.2% or 3.7 is where it ended. I'm sorry, when I was doing my math, it was up a little higher. 3.7% to end the day at 24.72. And it saw its first move below 25 since May the 4th. Could the fourth have been with us today? Well, we talked a little about companies giving revisions, either up or down, between earnings yesterday. And then we get this bombshell of a downgrade revision today. And not from just some little fish in the sea, but from a big mega cap company. See, today's session was dictated largely by the response to the fiscal Q4 earnings warning from Dow Jones heavyweight Microsoft, ticker symbol MSFT. Now, this warning came out before the market opened. That's why at the very beginning of the market, there was this indecision on where should we go. Are we just going to hold pattern? Are we going to go down, up? What are we going to do? This warning had to be digested first, and it was a tough one. The company shared in an 8K filing that it now expects fiscal Q4 EPS to range from $2.24 to $2.32 versus prior guidance of $2.28 to $2.35. So not a huge pullback, but it was a downgrade from a heavyweight like Microsoft. Now, the downward revision, it was blamed on the unfavorable foreign exchange rate movement. That's interesting. The headline of this was jarring to investors and traders alike. It knocked back the futures market, and of course, Microsoft too. Microsoft was actually down as much as 4% at its worst level of the day. But like the broader market, it found its footing and got up and started running again. Now, look at this. Microsoft, this is the chart. I'm going to go to the 5-minute for today. I'm going to put volume back on here so we can see it better. That's it, right? That's it. Nothing really exciting. This morning, it reached its low right at the open. There was a gap down. It's right here above my head, this gap down overnight. And then it was a slow and steady march higher. Not a big move. Microsoft ended the day up 0.79%. But it was a big move because of how far it was down earlier in the morning. Now, Microsoft, it recouped its early loss and then some. And it closed at its best level of the day, just like the S&P 500 did. Look at this. Microsoft, the very last candle, it's the top candle of the day. The comeback effort was abated by an understanding that Microsoft's earning guidance revision wasn't an operational issue. Additionally, there was a renewed appetite for mega cap stocks during the day, which eventually flowed through and into Microsoft. Now, the way I love to compare this is with the Vanguard Mega Cap Growth ETF, which is led by Tesla. Ticker symbol TSLA is Tesla. Look at what Tesla did today. 4.63%, another percent in the after hours. A good move. And this is the 5-minute chart. So everything for Tesla, really, it came in this morning, and then it kind of slowly sold off, unlike Microsoft, which was slow and steady throughout the day. Another leader in this mega cap growth ETF is Meta Platforms. Ticker symbol right now is FB, but that will be changing to Meta in just a few short next week, I believe it is, on the 9th, June the 9th. It will no longer be FB for Meta Platforms, or previously known as Facebook. It'll be Meta, META. Okay, Facebook, again, nice, slow and steady march higher. Now, it didn't close at its highs for the day like the indices did, but look at that. Nice, steady movement. Nice and steady movement higher. That's a good thing that you want to see. Unlike yesterday, yesterday was a down day for Facebook or Meta Platforms, and it all really happened in the morning. And then there was a big drop overnight. But this nice, steady up and to the right march, that helped out the market. This ETF jumped by 3%. And then the one I love to compare, before on Facebook, just real quick. Sheryl Sandberg, the COO of Meta Platforms, she announced her resignation. She's leaving the company during its time of transformation. So she's out. Good luck to her on her next chapter. The stock market's early resistance to a selling effort, in spite of Microsoft's warning, helped embolden a rebound-minded spirit or force in the market, which traded lower in the previous 2 sessions this week. Now, at the same time, oil. A jump in oil prices, it didn't scare buyers away either. We can look at oil, US OIL, and you can watch that, chart it, see what it's doing. Let's go back to the daily view on the chart. Today, crude oil futures traded below $112 a barrel. In an early action following an FT report that suggested Saudi Arabia is ready to increase its production if is the big word, there's a significant cut in Russian output because of the EU sanctions. Crude futures quickly rebounded on the news that OPEC Plus is planning to allow for a production increase in July and August, versus a previous plan that would have raised output by a much smaller number. Now, the agreed upon increase was considered by traders to be an underwhelming relative to the demand outlook. So prices reversed course, which was also helped out by a report from the EIA that crude stockpiles saw a drawdown of 5.07 million barrels last week. Look at oil. Let me get this chart straightened out here. There we go. It's been marching higher. It is out of its trading channel right now. It has popped out of it. I'm expecting a pullback in oil. Would not surprise me in the least. Now, oil today, it's settled up 1.3% to $116 a barrel. And look at it now. It's at $117 a barrel. So price is still rising. And with oil prices continuing to rise, the question has to be asked, is this the beginning of the economic hurricane that JP Morgan Chase CEO Jamie Dimon has predicted will hit the U.S. economy? Well, stocks are still going up, so it can't be happening yet, right? Now, strikingly to this rise in oil, the energy sector never gathered any real rebound momentum today and was the only S&P 500 sector to close the day in negative territory. Gains for the remaining sectors ranged from 0.6% utilities to 3% consumer discretionary. The Treasury market had an uneventful session following a mixed batch of data, economic data, and an acknowledgement by Fed Governor Bernard, who is an FOMC voter, that it's very hard right now to see her, for her to see, I guess I should phrase it, a case to pause rate hikes in September. Now, that's completely against what we have heard so far from other Fed members. Now, because of this news, I'm surprised the market didn't slip a little bit. But the 10-year yield, it slipped by 2 basis points. We look at that, US 10Y, that'll show you the 10-year. It's still way above that resistance there. Let me bring the moving averages back in so you can see that. Right now, it's really kind of playing on top of that 21-day moving average, and it's above the 50. And remember, with the 50-day moving average, bullish above, bearish below. So it ended up at 2.91%, and it's unchanged in the after hours. Now, the 2-year yield kind of followed suit. It fell 2 basis points. We can look at that US 02Y on the chart, and it's going flat again. It closed the day at 2.63%, and it's still sitting right there. I think it's reasonable to think that conviction was lacking in the Treasury market ahead of Friday's release of the May employment situation report. And we also get the May ISM non-manufacturing index, both of which hold market-moving momentum on their ability to influence the market's thinking about the future course of the economy and monetary policy. Another area, I don't really dive into it too much, is gold. GOLD. You can just use that. Use the TVC over here on the right for gold. Gold made a move today, and it actually posted its highest close in nearly a month, gaining investors who are looking for a safe haven asset after the latest U.S. economic data signaled a softening economy and a tight labor market, while Treasury yields and the dollar both fell today. For me, for gold to get in a trade, I have it written right here on the chart. Break 1870. Gold right now is at 1870. So if it can break that 1870, and on the daily here, it needs to break 1870, and it needs to close above 1870, and then I think I'm looking at this more interestingly for a trade, because I do believe by the end of the year, there is room for gold to run. Now, gold has been a bit neutral lately, right? If I go back, the middle of May, there's been a bit of a rise. Actually, let me do this for you. For gold, let me put this line right here, right there, okay? Change that color so we can see it better. This line right here, we only have 2 touch points, and whenever we do a trend line, we need 3 touch points or more to have that trend line confirmed. Now, we're making higher lows, which is a good sign, but, and this is why 1870 is a big deal, we're not making higher highs, which is going to put us in a bit of a wedge pattern here, right? If this can break 1870, no, don't go back down to 1869. If this can break 1870, then we're going to have a breakout moment, I think, for gold. But 1870 is a very, very key area. Let me blow that up a little bit better there. And actually, let me just darken these 2 trend lines here up a little bit. There we go. That looks a little bit better. 1870 again for gold. We break it, and we could potentially have a run there. Damn it, I'm late. It's okay. No worries. No worries. No worries at all. Okay, let me keep rolling on this. Now, on the economic front today, we got Q1 productivity, and it was revised to a negative 7.3%. Unit labor costs were also revised to a positive 12.6%. The key takeaway here is that Q1 marked the largest decline in productivity since the third quarter of 1947. 1947? Oh my goodness. I didn't say 2007, 1947. That was before I was born. That was a long time ago. Another important takeaway is that 8.2% increase in the unit labor cost over the last 4 quarters was the largest since the third quarter of 1982. That is bad news for the economy. Then, initial jobless claims for week ending May 28th, they decreased by 11,000 to an even 200,000. Continuing jobless claims for the week ending May 21st decreased 34,000 to 1.3 million, which is the lowest level since December the 27th of 1969. The lowest level since the year we were on the moon. Since the year that we were on the moon in 1969. That was a good model of Camaro that was introduced in 1969 too, I have to admit. But wow, all of these figures coming out about the economy, and we're tracing them back to years ago, decades ago. The key takeaway in the labor is the understanding that the low level of initial and continuing claims is consistent still with a very tight labor market, which in turn is consistent with worries that wage-based inflation pressures could persist and prevent aggregate inflation from falling as quickly as many would like it to see. Then lastly, as we're watching gold here just kind of hang out at that 1869 to 70 point, the ADP estimated that 128,000 jobs were added to private sector payrolls in May. Now, the main thing here was the 91,000 decline seen in small businesses versus the 97,000 increase in medium businesses and 122,000 increase in large businesses, which tells me that small businesses are struggling to keep up with wage demand that larger and better capitalized companies can offer employees. It's the small companies that are hurting the most right now. And the little guy, that's the backbone of our economy. Let's look at Crowdstrike, because in the after hours, we've had some news. CRWD is the ticker symbol for Crowdstrike. This is a internet security, cybersecurity company. They reported their earnings. Now, on the day, this is again the daily chart here, they were up 7.7% during the day. They fell 2.6% in the after hours, and that mainly had to do with its guidance. Now, Crowdstrike ended up on top of earnings with EPS at 31 cents a share. That beat by 8 cents or 33.5%. They beat on, one more thing about that EPS beat. I have written down that EPS beat was up 210% from the same quarter a year ago on an adjusted basis. So that's a really good increase there for EPS. Now, revenue came in at $487.8 million, or a 61.1% year-over-year gain, which is good. And that beat by $23.8 million, or 5%. So those numbers, they look good. Now, for CrowdStrike, you really need to focus on the annual recurring revenue. Any company that has this metric, it's all about subscription, right? Sometimes in the earnings report, it'll say ARR. That's annual recurring revenue. It's a financial metric that is tied to subscription customer growth. Very important to look at for subscription-based companies. Now, during the quarter, ARR, or annual recurring revenue, it increased by 61% to $1.92 billion. That barely edged by estimates for ARR of $1.91 million. Okay, so guidance pulled them down a bit in the after hours. CrowdStrike, I think, is a good company. They work on artificial intelligence to help spot endpoint violations, and I like CrowdStrike. Zscaler, I think, is one that's doing pretty darn good. And this stock price, it has just been all over the place. It's down 15% year to date, but the overarching arc of its gross margin has been doing pretty good, but they're seeing a little bit more pull on that margin this year right now. So we can go to the quarterlies. They really hit a hole in Q1 on that profit margin, but they've been pulling back up since then. So I like CrowdStrike. Okay, I want to bring your attention to our Twitter account, okay? It's just at Ticker Time News. The reason I want to bring your attention here is because we share all kinds of information all throughout the day. Most of it breaking news type stuff, okay? So, for one, this is some news about Apple that I think is interesting. Apple drifts slightly lower on rumor it will launch a web search engine similar to Alphabet Google's, according to at Apple Insider. Now, obviously, the related stocks are GOOG, GOOGL, and MSFT, Microsoft. Remember when Apple came out with its maps, trying to compete with Google's maps? And it didn't really work out so well for Apple. So I'd be curious if their Siri personal assistant is going to improve. They need the answers to the questions that people are asking, not sending them off into a million different directions on the web. So I think that could be what's the driving function behind this. I don't think it is to compete with, just opening a window and then boom, go into a search right here. I think it's more along the line of they have a smart assistant. They want to make it smarter. So we need answers. That's what I think this news is about. Then we have some news about Coinbase. Coinbase ticks slightly higher as the company says it will extend its hiring pause for the foreseeable future and rescind a number of accepted offers. Coinbase is not the only company to start tightening its hiring. We're going to hear more and more of companies starting to lay people off we're going to see that number of job openings go down. And it's not because the jobs are getting filled. It's because employers are taking those jobs off the help wanted boards, right? We're going to see more and more of this tightening. That's not good for the economy. That's not good for a recession. Because one of the big key ingredients that you need for a recession is a weak labor market. Not a tight labor market, but a weak labor market. And if companies are starting to tighten on that now, they see something in the future like what Microsoft projected this morning. Continuing down, Kohl's, who had many suitors placed bids to buy Kohl's, to take it over, like Microsoft is done with a gaming studio. According to the New York Post, this story, and the reason I find this one interesting is because this goes with the narrative that people are seeing the signs about the economy slowing, about the consumer weakening. And a takeover may not be in the best interest if you're not financially healthy. See, there's this principle that I like to use in business, and it's when things are good and profits are coming in, that's when you make sure your business is financially healthy. Here's why. Sometimes the way to grow your business is by acquiring other businesses, your competitors. That helps you grow as a business. Sometimes you want to expand your business into a different area. Maybe the best way to go is to acquire this company who is doing exactly what it is that you want to bring into your company. You find all the synergies that you need that work best for your company, and then you acquire that company. But let me ask you a question, and it's not a gotcha. It's just a simple question, just like in the stock market. Would you rather buy a company when it is at its peak in market cap, peak in value, or would you rather buy that company when it's weaker, when its value is less, when its market cap is smaller? Very simple question to answer. You would rather purchase that same company whose market cap has come down, whose value has contracted, right? And if we look over here at the stock market, just for a moment, let's go pick out, who do you want to say we are? We could be nearly anything. Let's say we are, oh my goodness, there's just so many to choose from. I'm going to go with one that I like just for this example. Actually, I've got a much better example. I'm going to go to Robinhood. Ticker symbol is HOOD, Hood. Let's say we are a fintech app, okay? That's our company. And we want to expand our company into being a brokerage, okay? We want to be a brokerage. We're a fintech company. We don't offer a brokerage service, but we want to. Now, we could go out and put in the money, the resources, and build out a brokerage service to add to our fintech app, or we can go out and acquire a company, buy a company. So Robinhood, maybe it's a good fit. Maybe there's some synergies there, And maybe the company would be a good bolt-on kit so we can now offer brokerage services on our financial app. If we were thinking about doing this back when things were really, really good, and Robinhood here, after its IPO, let's just look maybe in this area, right here after its IPO, it's pulled back some, right? Here, I mean, it was still $45, $50 a share. At this time, things are good. There's a lot of trading activity. Our app is doing really well. We're bringing in a lot of money. Maybe we're profitable. So at this time, I may be thinking that, yeah, I want to make sure, I want to add a brokerage. That's our goal. That's one goal that's, further down the line than maybe we want it to be. But it's in our big scale main plan for our fintech company. So while everything's good, instead of going out and saying, well, Robinhood would make a great company to bolt on so we can become a brokerage house, so we can offer our clients the ability to trade stocks, ETFs, maybe a little crypto. So let's go buy the company. Well, they're trading for let's see here, $40 to $50 a share. Man, that's a bit expensive. That's a little bit more than what I'd really like to pay, but I guess, we got to do it. This is what we need to do. Buying Robinhood at that point in time is the wrong decision to make 99% of the time. At this moment in time, things are good. You're maybe even profitable. You should be paying down any debts that you have, making your balance sheet as strong as possible so it becomes a shield to protect you during times when the market is weak, when business is not as good. So you pass on Robinhood, because if you would have bought it then, it would have made you struggle. You might not have been able to pay the bills, as it were. So you wait. You strengthen that balance sheet, and then this was September of 21. Now we get to May of 22, and now Robinhood is trading for $9 to $10 a share, all the way down here. Now this is a much better buy at $10 than it was at $50. We just saved ourselves a boatload of money by waiting for the market, for the companies to become weaker. Even our fintech company itself has slowed down, but we made sure that our balance sheet was strong to shield us from a weakening or weak economy. So maybe now is the time to pull the trigger and add Robinhood to our fintech app so we can offer our clients trading. So that way, when the market is good, we're out there every day, even when the market is red, with our fintech app, with the ability for you to buy shares when companies are at their lowest. So that way, when times get good again, we're stronger as a company. We bought the companies when they were lower and dirt cheap and on sale. Then the ride up is even that much sweeter. So I know this is more of a business analogy, but it can transfer into the stock market. So I know I went a little long-winded on that one, but it's something that's near and dear to me. being an entrepreneur is one of the awesomest feelings you can have. It's a great one. Being a father is number one, but this one's pretty cool too. So Kohl's, going back to full circle here, the reason the suitors they're bowing out, they're leaving, they're withdrawing their offer to purchase Kohl's is because they can see the economy is starting to wobble and the consumer is weakening, and buying Kohl's now is not the right time to do so. Wait for Kohl's. Just let me pull up their stock here. KSS is their ticker symbol. Look at this. Kohl's traded sideways for quite a while. And year to date, what do we have? A 16% drawback. That's not that big. But let's see if that is accurate to the top here. Yeah, it is. Looks like it. No, it's not. So I guess the year started over here. Where would we be? I see. Okay. So Kohl's was just at the beginning of this sideways move a year ago. So from the top, when these offers were made, I mean, this was the beginning of March of 2022. Those offers were made then. Kohl's has pulled back 45% since then. Since March, Kohl's has dropped 45%. So, that's a decent drop in price. Valuation, what is it now? It is at 5.1 billion. Maybe we got that 2019 theory. What if they pull back a little bit further? We go into a recession, the economy weakens. I mean, you can see Kohl's has been up there a few times. I mean, it really struggled when the pandemic hit. But if we got to 2019 levels, that would be up about $46 a share or so. So it's even under 2019 levels down here. So that's interesting. I definitely find that interesting. Let's see what else here. We got Riot Blockchain. They posted how many Bitcoins they were mined. Gainers, losers. Pinterest. Oh, yes, Pinterest. It purchased, or it's making an acquisition. PINS, pins. Pinterest is an interesting one to me. I can see how they could make a profit. And this was definitely a pandemic wave for Pinterest. What was this thing trading at? Goodness, $90 a share. It's now down to 20 bucks. Yeah, it was up 5.8% today. This area down here, price 17 is probably a good area where a floor might be. $17 a share. So Kohl's is buying the Yes. That's that's the name of the company, the Yes. The Yes is an AI-powered shopping platform for fashion that enables users to shop a personalized feed based on the user's active input on brand, style, and size. The transaction is expected to close in the second half of 2022. And there's some more notes here about the company specifically. So that's interesting to me. I think that is a good avenue for Pinterest to go in. I think that's really good. But the whole point in just going through a couple of the stories that we have out here, and here's Costco. Costco reported today that their comparable sales growth was 11.8%. Remember, last month, it was over 10%. Now it's over 11%, creeping up to 12%. Costco is doing a really good thing. Robinhood is terrible. Yeah, I'm just using it to paint a picture. What does Pinterest do besides pictures? Well, I don't think they have an advertising platform, right? Let's go over here. So they have an advertising platform. They've got tons of pictures. But the big thing about Pinterest is you store these pictures away. You come back to them and you're like, oh, I want that lamp. So I'm going to click on that lamp in the picture, and then it's going to take me directly to the store where that lamp is sold online. That's the big thing that Pinterest is trying to get to. So if I pull up I don't necessarily want to go with what Pinterest has put together for me, but I don't have an account set up on here. I don't even know if you can go to Pinterest or not without an account. But the goal would be that you see a picture, maybe it's a food, you click on it, you get the recipe. Again, a couch, you click on it, it takes you directly to the store. Okay, what is this? What is happening? All right, I don't know what just happened there. Let's just click on this picture here, for example. Say, for example, you like this this foot stand right here. Oh, look, see all the dots here? This is what I'm talking about. Yeah, this is it. So you click on it, whatever you see in the picture that you like and that you'd like to have for your home, sofas, whatever, accent chair, end table, coffee table, wall light fixtures. You click on it, it takes you directly to where you can buy it. That's the biggest thing that Pinterest can offer, and that would be huge for advertisers to be able to do. Yeah, it is a neat idea. Absolutely. Absolutely. Okay. So, yeah, just the point of this exercise is I'm always posting breaking news stuff on Twitter. So if you haven't followed yet, go give us a follow on Twitter at Ticker Time News. Chipotle here, they are accepting, in an odd way, it seems like a bit of a backwards way to do it, but Chipotle is now accepting cryptocurrency or digital currency in an odd way. Okay, tomorrow is unemployment rate is reported. Can it move? Yeah, it can move the market. It will move the market. It will absolutely move the market. Absolutely. Yeah, it will absolutely move the market. Okay, let's see here. I'll just close that out. Go back over to TradingView. Now, the thing about tomorrow with the market, if we are looking at the chart here and being objective, we know that the S&P 500 has kind of Stranger Things season 1. When those whatever those monsters are that are pushing through the wall, right? They haven't broken the wall yet, but they're kind of pushing on it like it's a rubber band and they're pushing on it. That's kind of like what the S&P 500 did at the close. It went right to resistance and it started to push its way through, but it hasn't snapped through it yet, right? That's where we're sitting right now. So it could be an explosive move out of it, or it could get rejected. So it's going to be critical in the morning, critical when that information is released tomorrow morning. I believe it's 8:30 a.m. Eastern time, so an hour before the market opens, so plenty of time to kind of digest it and see what's happening. Yeah, any news moves the market. If it is a big headline, here's a thought. Keeping up with the day-to-day activity of the market can be overwhelming, challenging, especially for new investors. So for new investors, one of the best things that you could possibly do is I'm going to clear the chart. All I want to see is the candles. And I'm going to put up the 1 month candle. We've been in a decline, right? And you want to get back in the market, or maybe you're sitting on the sideline. When has the market hit its bottom? When can we get back in it? Here would be my suggestion. Wait for a monthly candle to close green. Okay? I wish I could. Actually, I think I can. Let me see here. All right, I guess let me put this one on there. Okay. All right, I'm trying to clean this up here. What do we have? Oh. All right. Here would be, I know it's hard to see, but unfortunately, I've got too many. Actually, let's do this. The last time I had this problem, let's go to the SPY. I don't have as many lines on here to make it all cluttering and tough to see. Let me just take a couple of these elements off of here. If you're wondering, all right, when do I get back into the market? When do I start buying stocks? Trying to time the bottom is very difficult. And right now, if you've got the simple 21-day moving average on your chart, it's the purple line right here for me on my chart right now. And last month, the month of May, it closed below this line. This month, we're starting to build up some momentum. It's green month so far. We're up 1.9% on the month so far on the SPY. Well, we know $130 is an important place on the SPY to break above. And one of the reasons why is if I were to extend this 21-day moving average out, say we keep moving up a little bit, it would probably extend out like that as we continue to move up. If we break above that on the monthly candle, so we would have to close on the monthly candle up here above the $430 mark. That would be a key signal that, okay, we are back above this short-term moving average. Now is the time to start looking and being more watchful on what the market is doing. I've got my shopping list of stocks that I've already researched. I know I want to own these companies. Now that the market, because the market is in a downtrend right now, and you want to wait until the bottom is confirmed and the market is starting to trend up. Just because you don't time the bottom perfectly doesn't mean you're going to miss out. When I was a new investor, it was very difficult I would get in a stock, I'd ride it, I'd hop out, and then the stock would go up another 10%. Like, oh, why did I get out? I got out too soon. No, you got your reward. You're good. Don't worry about that extra 10%. The same thing about a stock hitting the bottom. Oh, if I would have only bought it this morning, I would have got it right at the bottom, another 10% onto my gain. No, don't worry about that. It's okay that you missed it. If you're being a true long-term investor, which most of us are, most of us aren't cut out for this day-to-day trading world because it's just so chaotic. But looking at this, look at this bull run that the SPY had. This is the SPY right here. This is a massive bull run. We need a correction. And if we look at this on the monthly chart, whenever we break below that purple line, that 21-day moving average, once we get back above it, we run. Look, let me just do a couple of measurements here. Oh, Dave, you're right. There is a lot of events happening all at once right now. That is true. And that's usually what happens when you're getting close to capitulation. That's usually what happens when you're getting close to a bottom. And that usually is what happens when you are creeping up or you are in, like we could be right now, in a recession. Everything happens at once. But let's go back here to 2011. If we would have waited for the monthly candle to pop back above, and then we rode that all the way until it closed under that 21-day moving average. You can actually use a 5-day and hug it even tighter. That's a 60% gain that we would have been able to lock in. Just with this one simple, and I know this is very simple, but that's one 60% gain we could have locked in. And what did we miss out on? Well, if we would have bought at the very bottom to the top when it broke above, 13%, almost 14%. Does 14% really matter that much when we just made 60%? I don't think so. I don't think so. And that's the part that we got to kind of leave behind. We don't time the market perfectly every day. All right. What about the next time? All right. It closes above this line. We get in and we're going to ride it all the way up until it closes under this line. And that was a 23% move. Sure, we didn't time it and get out at the exact top of the market. That's okay. We still got 23% gain. And let's do one more. The monthly candle closes above it. This is May of 2020. And we ride it all the way up. We would have sold last month because it finally closed above it. I mean, below it, my apologies. That's a 35% gain. So this is one way to take a step back, look at the grander scheme of things, buy once the short-term moving average, the candle closes above it. That's when you can start to look bullish on things. And again, I'm not saying get in and out of the market all three of these times. I'm just saying that if you would have done it this way, these are the gains that you would have locked in. 60%, 23.6%, and 35.1%. I'm sorry, 35.3%. All right, I'm as green as it gets. I started learning the market summer of last year and started trading in November. I don't want to miss out on this buying opportunity. I understand that, absolutely. And if you are trying to do this as a trader, it is information is the most important thing that you can have. And that's true whether you're investing or trading. Information, that's king. So, all right, let me just clean that chart up. All right, I'm going to go to the weekly on here. There's a couple things to keep in mind. There's a possibility that the May low on the SPY, which was $380, it would have been great to be able to time it and buy it then. But timing the market is really difficult. But one of the easiest ways is just using the moving averages. It's tough to get it right day by day. But as long as you're doing it, getting it right more often than not is okay. There are several days that I might just skip out of the market altogether and not trade at all because the market's being so volatile, or it's in the middle of a transition, because those are the days that can be the trickiest, and those are the days that can cost you the most. So buying in once a trend is confirmed is a whole lot better than trying to time it precisely and then get wrecked because you bought too soon, or you sold too soon and you took a loss, or whatever the case may be. Wait for the trend. Trading, you're probably going to look at a 5-minute chart. 1-minute chart is really tedious, but if you're trading this, using the simple rule of the moving averages can be the best thing you have. This morning, when it broke this short-term trend line right here, I'm out. I'm not in the market. As soon as it gets back above it and it starts racing, it does the little back test, like here on this candle right here, it tags it. Right here, it tags it. Let me change the color. So this candle here, it tagged that trend line, okay? Then that next candle, it closed above the trend line. The following candle was very flat. It's in the shape of a hammer, right? It's got a longer wick on the bottom, a short wick on the top, and a very short candle, almost flat. It almost looks like a hammer. Those are typically bullish candles. And to say that, right here is a hammer candle. That was bullish. It kept running. And there was a hammer candle right here. It looks like the trend line is kind of on it, and there's another line there, so I can't see it exactly, but it looks like that's a hammer there. And of course, that was bullish. So those little hammers can indicate that the market is back testing the trend line and we're about to move. So then you buy on this candle here, and then if we did that today, let's just say we bought when the candle closed, so at the top of it, and rode that up There was only one time when it broke trend here, so it is a possibility that maybe we sold or we waited for a back test, either or. If we waited for a back test, then we would still be in the market right now, up 1.8%. If we would have sold on this one, let's say we sold at the very bottom, we would only gotten 1.2%. So just use the moving averages to your advantage. Trade on that first. Learn the trends, and you'll do a whole lot better, in my view. This is the first thing that I learned to trade on, is just looking at a short-term moving average, and that tells you when to get in, when to get out. Take your gain and rinse and repeat. All right. We've been running over an hour here, so I guess I'll wrap this up unless you've got any specific questions you'd like me to answer. If you do, just leave them in the chat. I'd be happy to. If you found this video to be enlightening, actionable, informative, then do me a favor, click that like button, share this video, and join investors just like you and me by clicking the first link in the description. We'd love to see you there. All right. I'm good today. Thanks. You are welcome. Well, then we'll go ahead and wrap up the stream for today. As always, I will be back here tomorrow after the market close to talk about what, why, and how. I guess I could frame it that way. Until then, I will see you guys in the next video, and have a wonderful evening. Thank you for your time, your attention. I greatly appreciate it. Truly do. And yeah, that's it. All right. Thank you. Have a great night. I'll see you in the next one.